The effective guide on how to buy the dip in the stock market. Buying the dip is a strategy where an investor buys stocks while the price dips. This strategy is often used in volatile markets to take advantage of short-term declines in stock prices to reduce risk. This strategy may sound risky, but it can also be extremely lucrative if you're able to get in early enough before the price goes back up again. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now and subscribe to the channel to be notified when new videos are released. The whole idea behind the buying the dip strategy is that you are buying when other investors are selling. You are basically looking for opportunities when other investors panic and sell off, giving you a chance to buy their shares at a bargain price. The phrase buying the dip came about in 2009 when there was a significant decline in equity prices and people were purchasing stocks at low prices. The term was popularized by CNBC TV personality Jim Cramer, who urged viewers not to sell their shares and continue buying them when they get cheaper, which would result in future gains. Make sure you watch the video till the end, cause I have a bonus tip that'll help you make a lot of money from buying dips, and also save you some headaches from catching a falling knife. The first and most important thing to know is that dips do not last for too long. They are opportunities to buy the stocks and wait for them to rise again. The second thing is that dips happen for a reason. The first and most common reason is when there is a lack of market liquidity, which usually happens during holidays or weekends. It can also happen when there are major national or international events, such as elections, natural disasters, etc. Of course, as any other investment vehicle, stocks also carry risk with them. This risk can be reduced by diversifying your portfolio in different sectors of the economy: domestic and foreign stocks, large-cap stocks, mid-cap stocks, small-cap stocks, international developed markets. To be clear, this strategy does not mean that one should buy stocks when they are at their highest price. It means that you should jump in the game if you see that there is a dip in prices after a short period of time. Buying shares during dips can be seen as a form of speculation because it's uncertain whether the share prices will go up or come down. The dip can be due to a variety of reasons, such as uncertainty caused by recent events, stock market correction after a long run-up, lack of news or data on how the company is doing, reactions to negative news or events. Successful strategies for investing in the dips of the stock market: don't sell your stocks if they are down. If you are holding stocks for the long term, selling them when they go down will only cost you money. The best way to make money with dips is to just buy more stock when it is cheaper than what you purchased before. You can also buy stocks that have fallen in price to average out your cost basis over time. This strategy will help you minimize losses and maximize gains in the long run. What you should know before buying the dip. Before investing in a company that is going through a dip, it is important to have an understanding of the company's financial situation and management team. How to identify a dip in the market? Identifying the dip in your market is vital for any business to stay afloat. There are different approaches that can be taken, but one of the most popular methods is using volume indicators. The volume indicator method involves compiling a list of indicators that can be used to determine whether or not there's a dip in the market. This includes things such as market share, price, and other indicators that can help you. What are the main signs that indicate a dip in the market? There are a variety of indicators that can help identify a dip in the market. Some of these indicators include a decrease in price, a surge in demand, and an increase in the cost to acquire new customers. How to communicate your intentions to buy a dip in the market? The temptation to buy stocks when prices are low is an instinctive reaction. Investors are constantly being bombarded with predictions of a market plunge or rebound, which can be difficult to ignore. As a result, investors often experience the fear-greed spectrum while they're waiting for the market to change direction. Why you should start buying the dips today? You've seen it before. The stock is declining, but the news is good. You know it will recover, or at least you hope it will. But what's the right way to go about investing in this kind of dip? Should you buy now, or wait for a bit more of a bargain? This video will help you with that question and give you some tips on how to increase your odds of getting a profit when buying into dips like these. The bonus tip I want to leave you with is a very important tip that'll save you from losing your shirt when buying dips. I call it the 3-day rule. Basically, when a stock has dropped heavily for any of the reasons I mentioned earlier, you should not be in a rush to buy the dip at that time. You should exercise some patience. Give it at least 3 days or even 4 days before buying your initial position in the stock. The reason is that when a stock experiences a big drop due to bad earnings, negative news, or for any other reason, it normally takes about 3 to 4 days for the stock price to establish a range. Some of the original holders of the stock make it margin calls from their broker because of the drop, which would then force them to sell their stock at a loss. The stock price tends to drop even further by the third day due to more selling pressure. Just by being patient for at least 3 days, you may buy the dip at a much cheaper price than those who jumped in on the first day of the big price drop. If there's only one strategy you'll take from this video, let it be this 3-day rule. This one strategy has saved me a lot of money and headaches from catching a falling knife while trying to buy the dip. It has also helped me to make some great profits in the stock market. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.